weapon.
On Tuesday, the U.S. House passed a banking reform bill that's now on its way to the president's desk. The bill does away with many of the rules that were adopted after the financial crisis in 2008. Smaller community banks will be allowed to make riskier investments while still protected by taxpayer-funded insurance. And it does away with the yearly health test for banks, requiring those tests be done only periodically from now on. Congressman Matt Gaetz says regional banks in Northwest Florida had complained that the regulations over the past decade took too much work and too much money to stay in compliance.
And the problem, Bob, is that so many of our local bankers are telling me that they're spending more money hiring people in their compliance department than in their loan department. You see, banks ought to be taking capital and then reinvesting that into the community so that businesses can grow and jobs can be created. But unfortunately, as a consequence of the work of Washington, a lot of restriction has created the need for cost in compliance.
Tighter regulations will still apply to the nation's biggest banks, ones deemed too big to fail. But critics of the measure say the rollback of regulations will make the financial system more vulnerable to another crisis.
Governor Rick Scott has ordered